And I'll tell you one of my biggest positions. This was back in 2014. So I'm, 5, 6 years in. I've grown some capital from, 2,500 is my starting account. I put more money in as I was going along. When I got my account up to like $25,000, I like it was lightning in a bottle. I had the right strategy, the right time, the right volatility in the markets, and I went from 25K to 100K. That
Wow,
was one of my biggest returns
crazy.
I've ever had in a single year. And from that point forward, it's just been about preservation. 100 grand, keep growing, compound, compound.
Yep.
And that's, now it's 15 years of trading. It's just gone that way. So one of my biggest trades that I ever took as far as profits, Aussie yen short and Aussie New Zealand long. When the Aussie New Zealand for the first time in 2014-15 dipped down below 105 and hit parity, I was long from 105 down to parity. So I took that ride for 500 pips in a drawdown, but then I had the slingshot effect all the way back to 114. So I was leveling in, leveling in, leveling in, and then as was going my way, I was adding, adding, adding. So that was the first time that I really embraced dollar cost averaging in and then adding to a winning position. And
Yep.
I ended up making like for the account size that I had, it was like a 30% win on just that account. And it was in a 6-figure account.
In today's episode of the Real Traders Podcast, I got a chance to talk to Chris Pulver. And in this episode, we are going to hear his sort of styles of trading and how he went from small trading accounts in his early days to now managing a lot more money. And we're going to hear a little bit of the strategies that helped get him there, as well as some of his past experiences in all the different market environments that he's traded. This is an action-packed video, so make sure to stay tuned to the end, and I hope you enjoy.
Hey everybody, I am joined with Chris today, and Chris and I had a little bit of an exchange on the trading battle recently. Chris is a super cool dude. He's a veteran trader, and I believe he's been trading a lot longer than I have. Chris, how's it going? Welcome to my little podcast here. And why don't you introduce yourself a little bit and tell us a little bit about how long you've been trading and stuff like that.
Sure. Thanks, Nick. Nice to be with you. Last time we were hanging out, I was hosting. It was you and who was you? I think I hosted 2 battles with you, and you
Yes.
were 1 for 1. So I'm trying to get you back into the winning circle, hopefully.
Yeah, so I did one with Austin Silver.
That's
I
right.
think you were with me there, which
And
was
then Jerome,
awesome.
right?
And yeah, so
Yeah.
it was a lot of fun. We
Yeah.
had a good time with it. And so tell us on that one, you were kind of like a moderator, so you were
Right.
doing the in between stuff. But I wanted to invite you on separately to give you a chance to just kind of share a little bit of your story and for us to talk some trading.
Sure. So I'll give you the hopefully the 5-minute intro to me and my career. So basically I've had an interest in trading and investing since kind of high school, college. I started an investment club with my brother, got some friends and family involved, and that was in 2000 when I graduated high school. So I've been in stocks for 20 plus years. I fortunately my career path after school and grad school, I got into the golf business and I was an instructor, and that took me all over the world. And one of my clients actually was a full time fund manager for Forex. And so he managed about $15 million trading nothing but currencies. This was probably the first introduction to what a trader investor work life balance can look like. This particular gentleman played golf 5 times a week, was a member at a local club, worked about 3 hours a day, sometimes 5 days a week, but mostly 4. So I'm like, 12 hours a day of work, playing golf 5 times a week. And I'm like, I need to figure out how this guy does it. So it was, I'll never charge you for golf lessons, but you have to show me how I can start trading. And that was 2007, 2008. So between an investment club with stocks, getting involved in currencies in 2008, incorporating options for the last 6, 7 years, and then starting to dabble in Forex, or I'm sorry, cryptocurrencies since 2017, 2018. I'd say right now I'm a bit of a multi-asset trader, and taking care of some capital and just grinding away. So this year has been a year of the trader. I think it will continue to be that. And so far, so good. It's been interesting how the Forex market and the equities market have been almost polar opposites. I've had some
Yes.
fantastic weeks in stocks and options, and I've managed some drawdowns in currencies. Then I've had great weeks in currencies and managed some drawdowns in stocks and options. So we really just have this kind of this bifurcated, polarizing, like risk on, risk off markets of how things are moving. And I find myself being very hedged this year, and not a bad way, but like things are going to win, right? I'm going to manage my
Right.
winners as well as my risk, and just kind of make sure that I have enough, capital and dry powder and margin to like get in where I want to get in, because there's just, the market can really go a lot of different ways right now with where everyone is speculating. Nobody knows where the Fed's going to be. Nobody knows whether we're going to have a worse inflation, or we're going to see lower lows in the markets, and just swirling uncertainties is driving, I think, everyone crazy. But at the same time, as a trader investor, you have to roll with all these nonsensical punches, and
Yes.
keep surviving.
Chris, and that's that you there's so much cool stuff to unpack there. I love this is why I asked you on, is because I love speaking to people who have more time in the markets and more experience behind them than myself. I've been doing this for about 5 or 6 years. I feel like I've learned a million things, but I know that if I'm learning things each and every day, that there's so much more for me to learn in the grand scheme of things. But there's a lot to unpack there in terms of what you just said. Some things I really would love to hear about is maybe, so you started trading currency, specifically stocks and currencies, right around the 2007 2008 period of time, which is
Hmm.
a fascinating time to get into the markets for the first time. You're
Yep.
stepping right in front of, like, we just had this, 2006 2007, relatively calm, prosperous times, leading into some of the most tough market conditions ever in terms of buying equities. You saw portfolios
Right.
down by 50% and all that sort
Right.
of thing. And I'd love to compare notes with that period of time then, Chris, compare it to now, because you have some interesting devastation in the market that we haven't seen in a while. A lot of stocks, a lot of tech stocks getting destroyed, and maybe how that also has sort of come into the currency world as well. Are there any similarities between, like, your experience just getting started 2008 period of time in the currencies and equities market, comparing it to now?
Yeah, great question. So I think, let's go back a couple of years to 2020. 2020, with as wild and uncertain as the COVID crash was in equities, we saw, triple, quadruple daily trading ranges in Forex. I mean, when we were looking at the risk off trades, anything with the dollar, anything with the euro, crush the Aussie, crush the New Zealand dollar, crush the CAD, crush the pound for the most part. Um, that type of volatility, seeing 6, 7, 800 pip daily trading ranges, that reminds me of 2007, 2008. When like
Yes.
the panic button is being pressed, you see wild and irrational things happening in Forex. Now,
Mm,
having said that, that's 13, 14 years removed. I mean, even going to 2020, it was tradable. I mean, I was long euro Aussie, long euro New Zealand during COVID.
oh, that's amazing.
I was also hedged against that because I was buying the Aussie dollar that I ended up dollar cost averaging through. If you look at, I could show you a MyFix book of my 2020, and essentially I was washing some losses with some profits, dollar cost averaging in, building through. It took me about 2 or 3 months, just like it took the market to fight their way back. And I held positions through a lot. I made some nice profits on, Aussie Swiss holding through, Aussie dollar holding through. And even though I took some losses along the way to have some, some choppiness in my equity curve, after April and May of 2020, I was at new highs, and it was a nice steady run for the last couple of years. Go back, now let's talk about 2022. Um, I'm not sure if you have a phrase for what's going on right now, but I've been calling this kind of a great reset,
Mm,
or the great reality, because we've had a fantastic bull run since 2009. Once we
yep.
bottomed into 2009, we've had 13 years of the easiest money, the cheapest money, the Fed put, if you will, and the backstop that just kept asset prices going higher. And if euphoria needs a definition, just look at 2021. When
Yes.
people are buying yachts in the metaverse, when people are selling, NFTs and stuff for just tens of thousands of percent gains, that's what euphoria looks like and feels like. And here is the great reality, where that's not real. That's not what markets should be doing.
Right.
And that's what this has felt like. Now, what's different about this year is, how do we have, 60, 70, 80% declines in some of these tech stocks, and yet we still have, 15 to 20% declines in the indices, and we also have energy stocks that for Q1 did extremely well. We
Mm,
have these kind of sectors that do well, sectors that don't do so well, and everything was pretty terrible in April and June. But there are winners that are emerging, and what we also don't have is, we don't have tons of labor cuts. We have a pretty tight labor market, but we still have people that aren't willing to work. So it's not the same as your typical jobs are getting lost and cut like crazy. There's
mm,
contractions in tech, but it's not everywhere.
right.
Services, travel, hospitality, all those jobs coming back. I just saw today from Charlie Bolello, he was talking about, weekend charts and mentioning that we've officially gotten all of the jobs posted from the 2020 crash.
Mm,
So, I mean, I think it was 21 million jobs, or maybe I'm making that number up. But whatever it was that we lost in during 2020, it's taken the last 2 years, but we've officially marked that with last week's non-farm payroll print.
interesting.
But there's still a labor shortage because people aren't filling those jobs. So they're available, but they're not filled. So that's what's different. But I'd say if I'm going to draw some parallels, you know, volatility is the big thing when there's panic, when there's uncertainty across the board. That's when you notice things are rough. Things are pretty difficult to navigate. But as a trader, volatility is a good thing. Currencies this year, I was just doing some testing on some strategies this week, and I'm noticing, going back to the last, 2 week trading averages, the last 4 week trading averages, and I was actually curious. I went back the last year and just did the last year's daily trading range on the daily time frames, and there were about 12 to 14 currency pairs of the 28 majors and crosses that had over 100 pips a day. Now, if you traded back in 2013, 2014, even all the way through, like, there were some periods of higher volatility, but 2012, 13, 14, once the momentum was up and running, once the dollar was finding some range levels outside of the breakout in 2014, currencies have really quieted down. And so I would say that we've had low volatility in Forex for a long time, longer time than, 2008 was crazy. 2014, 15 had a period of strong volatility with the dollar, and then
Mm,
things were contained, carry trades. 2020, I'd say we kind of cracked into that high volatility environment once again. And
yep.
here we are with pockets of it, right? We have pockets of high volatility. We have some really sustained volatility on the JPY crosses. So the dollar's been, very liquid, aggressive. The euro's the same thing. The yen's the same way. Um, and yet, I still think where we're at, you mentioned some of these extremes. Think about where we're at. If you look at a chart in Forex, you look at a 20, 30-year history of retail trading, those prices are really attractive. I mean, I'm literally sitting at some currencies where I'm interested in. I'm buying 30-year lows right now. I'm selling 30-year highs right now. So I'm
Yeah.
interested to see if some of these technicals and pendulum shifts and swings happen, because if they do, imagine putting in, let's use an example like the Euro Swiss. Imagine putting in a
Yep.
low on the Euro Swiss at 97.50, and that low is going to be a multi-year low that ends up going back to 105 to 110 to 120, where we had
Right.
the peg break back in 2015. So we could be really on the precipice of some major, major moves in Forex, which I think is super exciting. And I'm just trying to make sure that I am positioned accordingly. I
Well,
have taken,
and Chris,
I'm sorry. Yeah, go
I was
ahead.
going to ask you too, because I just want to stop you there because I know just from a little of what we have talked about in the past that you're a little bit more of like you're longer term in terms of currency trading, and I
Correct.
know that a lot of traders who are going to watch this and who are going to listen to this are much shorter term. In fact, I know that you trade off much higher time frames. I've heard you talk about your Euro Swiss idea
Mhm.
prior. You're talking weekly charts and stuff like that, right? Is that Yep, weekly charts. And compared to, the average trader who might be listening to this, who's trading off the 15-minute, the hourly chart, can you just talk a little bit about, like, you mentioned some aspects of the carry trade. You found your style sort of position building, I believe, on things like Euro Swiss, trades like that. Like, how did you find your style? And just in a nutshell, kind of how are you approaching the market?
Yeah, so the way that I kind of gravitate, so let me talk about how I first started trading. The
Yeah,
gentleman that taught me was a day trader. 1 minute charts, you line up the 1 hour time frames, the highest time frame you look at, you find your trend for the day, the week, you're following that for the most part, never go against the grain of what you see on the 1 hour time frame. And we're trading and executing alignments on 1, 2, and 3 minute charts. That was my bread and butter for the first year that I traded. I just, put the stop loss in 20 pips, go after 20 pips, use a trailing stop loss, tried to grind. But what made me uncomfortable with that strategy is after doing it for so long, I will admit I grew my account. My first trading account was with Global Forex Trading, and it was $2,500.
mm,
And that account grew over the course of like 6 months to almost 10 grand. I was pretty proud of myself. But then once it got up to 10 grand, I'm being encouraged to trade multiple standard lots on a $10,000 account, which again, I had the margin to do it. You're using leverage in Forex. But I started to notice that emotionally, I was trading very different, right? I would be so much more angry with losing when I was trading standard lots than I was if I was just trading for a dollar, you know?
right.
And so that is where I started to have the awareness of, this makes me uncomfortable. I don't like trading like this because it
Right.
just felt like although I could check in for the morning, check out when I'm done, it ruins your day, Nick. If you don't win the day, it's not really a good day. It feels crappy to be like, man, I just lost $500 today. Now,
Exactly.
so now I don't want to go do anything. I don't want to spend any money. I got to get it back tomorrow, and it just was toxic for me. So
Yep.
I started to gravitate towards bigger time frames, swing trading, and one of my biggest discoveries, and this is nothing secretive, it's just price patterns. Looking at highs and lows and how the market reacts off these highs and lows, and trading support and resistance and trend lines and really simple but really powerful elements in the market, and then just trading price around them. So identify resistance, trade price at that level. Identify support, trade price at that level. And you can go from a small time frame. If you prefer to trade smaller time frames, that's great. But have the bigger time frame structure in mind that gives you the probability that price reacts to it. I
Yep.
like the idea of a bounce of 50 to 100 pips off support or resistance that you can trade with the precision of a smaller time frame, as opposed to I'm in the meat of the day, or the London session's moving, the New York session's moving, and I've got to somehow scoop some movements during the time that I'm up and at the computer. And so I
Yep.
realized, look, this is a 24-hour market. I cannot force the market to move for me, right? If the market doesn't want to do anything for 3 hours, it's up to me to exercise the restraint to not
Yep.
trade for those 3 hours. And that is very difficult when you sit down every single day thinking, I'm going to work. I got to make some money today. And
Yep.
so that's why I gravitated towards the higher time frames. For me, it was about price patterns. And I started trading head and shoulders, crown patterns, rising and falling wedges, double tops, double bottoms. And like I said, just structure wise, support, resistance, and trend lines. And I've built courses on that. And it's so easy. It's so
Yep.
elementary, but I'm
Yeah.
telling you, think about every good trader out there. They're probably building something around those principles. They're probably building something around structure in the market, price action, liquidity levels, pockets in the market. And to me, that's just what made me look at higher time frames, see that there's more validity, more like magnetism to those higher time frames. And I'll tell you one of my biggest positions. This was back in 2014. So I'm 5-6 years in. I've grown some capital from 2,500 is my starting account. I put more money in as I was going along. When I got my account up to like $25,000, I like it was lightning in a bottle. I had the right strategy, the right time, the right volatility in the markets, and I went from 25K to 100K. That was
Wow.
one of my biggest returns
Crazy.
I've ever had in a single year. And from that point forward, it's just been about preservation. 100 grand, keep growing, compound, compound,
Yep.
and that's now it's 15 years of trading. It's just gone that way. So one of my biggest trades that I ever took as far as profits, Aussie yen short and Aussie New Zealand long. When the Aussie New Zealand for the first time in 2014-15 dipped down below 105 and hit parity, I was long from 105 down to parity. So I took that ride for 500 pips in a drawdown,
Um,
but then I had the slingshot effect all the way back to 114. So I was leveling in, leveling in, leveling in, and then as was going my way, I was adding, adding, adding. So that was the first time that I really embraced dollar cost averaging in and then adding to a winning position. And
yep.
I ended up making like for the account size that I had, it was like a 30% win on just that account, and it was in a six-figure account.
That's
So that
amazing.
was that to me was like, it's hard to go back to day trading for a couple hundred
Yeah.
dollars when I'm making 20 to 30 grand in a chunk, right?
Yeah.
And
And
it took
and
it
the
took a
thing
couple of
is,
months, but it's amazing.
yeah, the thing is, Chris, is what you said. Some really, really cool things that if you listen to enough traders, and you and I have both spoken to probably hundreds of traders over
Mhm.
the course of your career and in my career. The thing is that I find amongst the most experienced and veteran traders is that they consistently sort of talk about, like, when it comes to a style of approach, how they execute the markets, where they found sort of their niche. It's never in a aspect of like anybody who doesn't do what I do is bad at trading, and that what I do is I've unlocked the secret.
Right.
Whereas I think a lot of new traders, the first thing that they think is like, okay, I'm watching this guy on YouTube who seems to know what he's doing. He's got a secret that he's not telling me.
Mhm.
And in fact, it's actually the complete opposite. You listen to enough of these podcasts, you listen to enough traders out there who are sharing realistic stuff. And what you'll hear is that each person, through their ebbs and flows in the market, their ups and downs that we all have, they find their style and they don't turn around and bash everybody who doesn't have the same style. That's a good, actually, a good signal of somebody who knows nothing about what they're doing is when they act like they've got, the holy grail system. You
Right.
just talked about something where you experienced one of your best trades ever, but you had to deal with some of the problems. You had to deal with a drawdown. You ultimately were able to create an exceptional trade out of that scenario, and that's the beauty of trading, is that there's not one path to success, but everybody who I hear from that I know is a profitable trader, who's somebody who shares realistic approaches, they always talk about finding their specific comfort zone.
Hmm.
And you hear it all the time when you're on YouTube. It's like, oh, find what works for you. But what does that really mean? And if you really listen to what that truly means from people who are giving you hard examples like you just gave us, what you're talking about is dealing with downs and ups and then finding where you're willing to take that pain and
Hmm.
where you are not willing to take that pain. You mentioned that in your day trading experience, you were like, I didn't like the feeling of like, okay, I just walk away from the computer and I'm either a loser for the day or I'm a winner,
Right.
compared to being more adaptive with your trades, longer term position building, averaging in, taking out, adding into a winner. Like that more adaptive and not just a day to day style fit you more. And that's the beauty of trading, is someone who is listening to this might be like, you know what, actually, I like being done for the day and walk
Hmm.
away. And cool, do what works for you. Now, turning gears, Chris, I had to ask you one thing, and I know this is something that I'm really excited about. Recently, we've had interest rates changing
Hmm.
dramatically again. Like we had the big cuts in 2020. Of course, that was something that was a big market changer. But now we've got interest rates going back up. We have certain countries, like right now, the US and Canada and New Zealand, who are kind of leading the charge with interest rate hikes. And with that comes the lagging central banks and the speedy central banks. With that comes the carry trade. Is there anything that you're doing with the carry trade right now, and maybe just like a super easy definition of what the carry trade is for people who are watching? Is there anything exciting about that, like there is for me?
Well, there should be something exciting about it, but I think it also varies from liquidity provider and broker to broker. It
That's
really does.
true.
I know I've watched some of the stuff that you posted that you actually had a CAD yen trade that popped up with balance, your balance and commission was a positive rollover, right?
Mhm.
So I'm pretty sure, like I'm looking at my balancing financing day to day, and I'm still not getting positive rollover. And
Interesting.
there's not a lot of negative carry positions I have. I am dollar Swiss long, Aussie Swiss long, Euro Swiss long, which they just raised rates, 50 basis points.
Yeah.
So it depends on the broker, but I will say this: at the rate that we're going, and again, I know that as a trader, I sign the risk disclosures and the risk disclaimers, and it's probably all on me. And the broker might never have to pass along those carry trade profits for me, right? I
Yeah.
might never experience that ever again. But to those of you that do see carry trades or can see a carry trade, what that is that is the differential in between central banks' cash rates. So for right now, let's just use like one of the higher ones to the lower ones with the major countries. So right now, the New Zealand dollar, we have New Zealand sitting at 2.5%. So if you are long the New Zealand versus the Swiss,
Mhm.
that's 2.5% in favor of the Kiwi and negative 0.25 for the Swiss. So that's a 2.75% differential. Now, you, the trader, with these intermediate liquidity providers, should see that if you were long a standard lot, maybe you can make an extra $5 a day. And that should be something that pops up in your account. So back in, 2012, 13, 14, I was intentionally long a lot of trades that were favoring carry trades, and I loved
Mhm.
it. And that's where I probably refined my dollar cost averaging, because I'm like, well, I'll just trade smaller and just build positions,
Yeah.
and ultimately like turn this right set up into a profit, focus on pivots and pockets and things like that. And I get paid on the trade for profit at the technical levels that I like, and I get paid to hold the position day to day.
Yep.
So that helped me. And then it all kind of changed in 2014, 15 when volatility went nuts and the dollar broke like crazy. And that was a tightening cycle that was starting from 2014 to 2018. And volatility changed, and the dollar was very, very strong for about an 8-month period. And at the same time, 8 months later, the dollar rebalances. So we had this crazy big parabolic run, irrational trends, high volatility, and then the market just stops and then rebalances over the next 6 to 12 months.
Yep.
So even what we're seeing right now, Nick, you're going to see, like, Japanese yen pairs are good examples. You're going to see that the irrational trends of 3,000 pip moves on the yen crosses in a 6-month period are still going to rebalance at some point. The
Mm.
problem is they are one of the most lagging
Yep.
and stubborn central banks where they're not changing their tone. So you
Right.
have this kind of bell curve of the interest rates on the hawkish side are going towards everyone. You have RBNZ, the RBA for Australia, the BOC for Canada, Bank of England, even the Eurozone for the
Yep.
first time in over a decade raised
Yep.
rates. And
Yep.
it's just because yes, inflation is super high. But one thing that is driving me crazy, Nick, this year is if you ever watch the CME Fed Watch tool, this is something it's publicly available. It's the CME group, and they had this Fed Watch tool that just kind of tracks the probability of what the market is pricing in.
Yep.
This year, I have never seen the market have to switch gears so many times. I've seen the Fed Watch tool shift every couple of weeks and every couple of
Yes.
statements and every couple of press conferences because
Yep. It's
the
been
market is
crazy to watch.
still not sure where the Fed's going to be. And even right now, after non-farm payroll last week and the latest CPI, which actually we have CPI coming tomorrow, there's still going to be a shift because the market doesn't quite know. Have they priced in enough of dollar strength? Because over the next 1 to 2 years, the markets are anticipating that the Fed is going to start cutting rates again. So it's like this reactive Fed cycle. We're going to raise rates so much, they're going to choke out all this consumerism. They're going to choke out all this demand. And then they'll just step back and back off and plateau and maybe even cut rates over the next couple of years. So it's
Right.
a really odd cycle that we're in. But again, in the thick of things, you have to adapt. And right now, it's like stubborn US dollar, weak JPY, stubborn Swiss franc. I mean, we've got Eurozone that's potentially heading into a recession and getting worse. But again, parity on the euro dollar hasn't been hit since the late 90s, early 2000s. We're at 20 plus year lows on the euro dollar. We've had a
Yep.
2,300 pip trend. I mean, you said you're short euro crosses. I'm personally long on the euro dollar, but I'm hedged with that because I'm long dollar Swiss. So
Which I
hopefully,
think is
right on something.
interesting. Which I think is interesting too, Chris, because I know that you are definitely longer term visionary,
Oh,
like
yeah, for sure.
sighted than I am.
Yep.
Like because like, and this is a cool thing too, is I might be short bias on the euro in the short term and
Hmm.
riding what I can out of this whole, Fed super hawkish. I've been very bullish on the dollar, and that's been one of my better trades in the last year or so is just
Hmm.
really just focusing on US dollar longs for pretty much most of my trading, which has been suiting me really, really well. At some point, I understand that that will change, but for me, I'm pretty trend following oriented. I think we talked about that when we were on the trading battle
Yep.
together. I'm very consistently following what is happening, and then when it changes, I cut it. I'm gone. I'm,
Right.
I'm out of that trade, and I'm on to the next big story. I was talking to someone earlier today, which we were talking about how cool it is, just the different phases. And I can't even imagine, you've been in this game much longer than I have. We've seen the pandemic story play out. We've seen the Fed tightening cycle start, and that's been an interesting story. The Chinese U.S. trade war with Donald Trump back in 2018. There's been so many stories that have created some beautiful trades that I've been a part of, and it's been such an incredible time just throughout my market career. Even though it's been 5 or 6 years, that's really tiny in the grand scheme of all the different stories that go on in the world of markets. And you might have this idea of like, okay, well, the euro might rotate. We might be hitting some beautiful long-term lows that could swing back, and I could be holding on to this trade, like you said, with your Aussie New Zealand went down to parity. You held it for so long, and it was an incredible trade. Like those sort of things can coexist, and I think that
Hmm.
that's so cool with trading, is like somebody who's following on. I trade predominantly like the 4 hour, and then execute trades on the 1 hour. And like you, I don't like the idea of feeling like I've got to make a trade today and make money by the end of the morning. I don't like that either, but I do like the idea of like, I can take a trade, hold it for a day or two if I'm wrong, and if I'm right, maybe I'll hold it for 7 days, 10 days, 15 days if it's a really good trade. And so
Sure.
I love that aspect as well. But just cool to think that there are different styles, hundreds of styles of the people who are watching this video, and there's that ability to coexist, and for people to make money. Unfortunately, more people will lose money, but there's plenty of strategies out there that can generate profitable results. And you're long euro Swiss, you're building positions. How do you, and this is an interesting side part to a lot of new traders, what they do is they get stuck trying to, they come at it with I want to build positions idea, but they
Hmm.
do it in a really scary, dangerous way that I'm sure that you're familiar with. They go super heavy on the buy side, and then they run out of margin really quickly.
Correct.
How do you, if you were to talk to somebody who was interested in building positions, if they
Yeah.
wanted to be more adaptive like that on a higher time frame basis, how would you encourage someone to start out, and some things to think about for that style of trading?
Yeah, so the easy thing. So number one, think of it this way: the way that I'm trading with long term targets is I'm investing. That's the way I look at it, right? If I'm investing, I don't care if the Euro Swiss for me takes a month, 6 months, a year. If I'm investing and I have a specific profit target, I know that I have X amount of dollars to build into that position, X amount of dollars to allocate to that position. So, and as far as entries go, just think of it this way: your first entry is probably never your best entry.
Yeah.
It is so hard in a 24-hour market to push the button, push the buy button, push the sell button, and that price, number one, you're going to pay a spread, so the price is never going to go your way instantly, right?
Yep.
If you chase the news, it's probably not going your way. You're going to get faked out or whatever.
Yep.
But when you push the button, the first thing you shouldn't be worried about is if price goes against you. Just
Yep.
think that it's going to. It probably will. So, can you stomach a 50 to 100 pip move against you? If you can, well, that's entry number two. So, if it was small entry one, small entry two, okay, take both trades, and now the price has to move 50 pips for you to oscillate to get you back to break even.
Yep.
What I'd like to do is I typically, if I show this to traders, what I'm typically going to do is I'm going to take probably 2 to 3 test positions. So I'll test an area. If it goes a little bit further against me, I'll test another area. I like to see oversold, overbought conditions with divergence. I like to look for things like that technically. And after a couple of test trades, now I'm going to start looking for confirmation that price is turning to go my way. Once it starts to turn to go my way, then I'll start stacking up orders in my direction. So typically, Nick, I'm going to build up like 3 to 5 positions, right? And if I really like a trade, my Aussie New Zealand, for example, I probably was in 15 trades. The dollar Swiss this year, I was in over 30 trades long.
Mm.
When we
Yep.
had that big breakout from 92 all the way up to parity, I was up like 30 positions on that one because it was just stacked, stacked, stacked because my profit target was
Right.
parity.
Yep.
So Euro Swiss, same thing. I've scaled my positions back. I was in, all over the place from 107 all the way down to parity. We broke through that. I scaled out of some. My dollar cost average or my break even right now is like 101 on the Euro Swiss. So I'm
Mm.
upset on a few hundred pips, but my profit target's back to 105 plus 10600. I think if you give it enough time, we'll probably head back to 110, 112, 120 is that big peg level that I think sits out there in this invisible ideal scenario of where the Euro Swiss is going to be. But like I said, if I could be profitable at 105, 106, I'm going to turn some profit and be done with it. So it's an investment position, and the first trade is never your best trade. So
Yep.
unless you are going to be absolutely precise on your entries and you have no like flexibility on if this is my trade, I'm wrong here, I'm right here, that's fine. Like the way that you trade, Nick, I know that you have a defined plan. You go after your 2 to 1 typically reward to risk, but you're pretty firm on a lot of those stops.
Yep.
And I recommend, yes, traders should do that. For me, I would rather trade smaller in trade size and use my management for the percentage and the dollars drawdown,
Yep.
right? Like I'm not nervous about the pips moving against me because
Mhm.
my trade size is almost
It's
inconsequential,
so tiny. Right.
right? It's almost insignificant. So if the market moves against me, all it means is I can buy it lower or I can sell it higher, and I can see the right alignments for the market to ultimately go my way, start managing some profits. And I share that with traders in my trading rooms, and that's how we have some successes. I have traders that come from all over the place, traders that have no idea, traders that are brand new, traders that have only known scalping, and all I'm trying to show them is let's find some direction together, right?
Yep.
If you can help traders find direction, like you said, you can do whatever you want. You can take, my strategy, your strategy, 10 other strategies, make it your own, customize it to your liking. But at the end of the day, all you're trying to do consistently is find direction and trade it.
Yep.
That's it.
Yeah, no, it's huge, and I think this is so fascinating because to be honest with you, what I show on YouTube is one strategy that I use, and a second strategy is more closely aligned with what you do, plus mixing it in with a carry trade bias.
Okay.
That's kind of similar, building positions longer term, and like you said, taking positions that are so tiny that it would take the most incredible thing to really put me in any sort of danger, at which point I'd probably look to find a way to cut out of the trade. But
Mhm.
either ways, the cool thing is that if you have the margin and the ability to take it as an investment, to take it more in pieces, like you're saying, and go very, very slow, and just look at the ultimate goal. The ultimate goal is, okay, maybe my entry is not going to be perfect. I'll just deal with it by building a bigger position that's at a calculated level, really small size, and I can ebb and flow with the market. It's
Mhm.
actually not too dissimilar. It is in execution so different than my primary strategy, which is my tight stops trend following approach. But the thing about my tight stops trend following approach is that there are actually some similarities in the sense that I take a trade with a decent size. I'm all in on my first position, but my stop loss is really tiny, and I totally accept that most of the time my entry is not going to be that great. Like I'm not like a super hyper technical trader where I think I'm going to be able to call technical spots like that.
Right.
What I'm more interested is I like to think of it as I am super strict in the stop, but super loose on the take profit. So I
Right.
actually don't use a take profit purely
Okay.
ever. Like I'll
Yeah.
never actually take like which is an interesting thing because I'll never actually take max profit on a position. I will always just trail my stops.
Mhm.
And similar to how you have that flexibility to build into a position that you want to take on and close out profits when it reaches your overall investment idea. And for me as a trend follower, my style there is like, okay, I build a position, and if it goes against me, I'm out of there so quick. But if I build a position, or I pick up a position and it goes in my favor, I will stubbornly hold on to that thing,
Mhm.
and I will not let it go until the market just goes crap the other way. So
Right.
and that works for me. And then that's the thing is everybody has their different style of trading, everyone has their different approach. But the commonalities between the two that I thought were really interesting is in both cases, you're not putting all your chips on the table. You're never going, all out on your first idea. You're always willing to adapt. For me, even though I might take a stop loss several times before I catch one that's actually in my favor, there
Mhm.
are times where I take, let's say I want to buy euro dollar and euro dollar is at a level that I like and it goes against me. Okay, I'm out of there. But maybe there's another level down below where I'm like, I'll try again with another stop there. And if I get pegged out, whatever, I'll
Mhm.
keep doing that because my position size initially is so tiny compared to the account.
Right.
Because I've seen just like you've seen even more market conditions. There are times when the markets are just ruthless to you. They will do just exactly what you think they could never do, just over and over and over. So what I understand is that even with no matter what strategy anybody is using who's listening into this video, you have to give yourself so much flexibility in drawdown periods, in losses, whether you're taking strings of losses or you're building positions that are accumulating some drawdown. You just
Mhm.
have to start so small. And that's something that I don't see a lot of people talk about on YouTube because it's not very exciting. But I know, Chris, that you and I are probably on the same page with just the smaller you can start, the more room you have to just be adaptive.
Yeah, I'd like to add something to that. Just a couple of techniques to maybe help out some traders. I mean, let's think about an account balance. If you have a $5,000 account or $10,000 account, actually, let me do this. Here's some fun for anybody to have. All right, in a demo account, so nobody needs to lose money here. In a demo account, here's the challenge: take any currency pair, flip a coin, whether you buy or sell, and spend some time working through a trade. Find a reason to buy, the pound New Zealand dollar and find a way to turn it positive. If you
Yeah,
want to learn a lesson in dollar cost averaging and look at pivot levels, look at structure levels, find support, some basic reasons to say, okay, I can buy it here. If it goes against me, what do I do? And
yeah,
another thing would be you can always change the trade size. You can start really small. If you like to take stop losses, I was actually just running strategy tests today on a couple of like day trading strategies. And what I like to do with kind of some robots like that when I'm going for intraday trading or looking for these little tight trends is I'll use a lot step increase. So that
yeah,
means that if I lost a trade at zero point zero 0.01 lots, the next trade it takes with confirmation is zero point zero 0.02. And
yeah,
if that wins, then it resets. If that loses, it goes to zero point zero 0.03. So it will incrementally increase in small amounts where it's not tying up a bunch of margin. I'm not like martingale myself into doubling down in every trade.
right,
It's still going to lot step increase, but it's easier to turn a trend profit if you took a small loss, then you get a nice win.
yeah,
Like with your style, where it's like you're
yeah,
not really setting profit targets. Let that sucker run. And if it's running
yeah,
with a slightly bigger trade size, that win just makes up for those losses, and that you build that loss up much faster. Like that
yes,
loss that you took is now recovered, and you're on to new highs, and you get it back. So it helps. So there's a
yeah,
couple of things. One is just experiment with dollar cost averaging if you're interested. Look for highs and lows in the market, major support resistance, buy low, and then stay in a trade. Trade small and build a couple positions. Have some fun
Yeah.
with it. Do it on a demo account.
Yeah.
And then for other stuff,
There's
trend stuff, be okay and flexible on the trade sizes.
Yeah, I was going to say there's just that's an amazing, amazing homework assignment for anybody who is listening to this. Seriously, genuinely, what Chris just said. Please consider, that idea. Don't put your live money on the amount. If you're just like not profitable, what Chris just said might be the ticket to helping some of you guys. If you get on a demo account and you play around with the idea of maybe I want to build positions, or maybe I want to add to winners, or something like that. Experiment with your position sizing. That is a huge barrier for a lot of traders. Is if you put yourself in a $100,000 demo account and treat it like it's real, and you're using point oh ones to start out, and you experiment with point ones and like tiny position sizes, whether you're adding to winners, whether you're lot size stepping with trailing stop losses or stop loss placements, or if you're building positions on something that you have a fundamental bias on, whatever it is, if you experiment with that, that was really a huge barrier for me years ago before I was able to actually become consistently profitable. That was the hidden component because I was always relatively psychologically decent at trading. Like I never really struggled. I never like blew accounts when I first started. I've always kind of been a generally pretty conservative, like pretty conservative risk taker, if that exists.
Hmm.
But and that's the thing is like knowing yourself, that little position sizing tip that you gave is huge for so many people to go in there, do your homework, and try this on a real, on a demo account that you treat like it's real,
Right.
and play around with those things. But I think that's a great homework assignment, Chris. Anything else you want to add to that, or what did you
Yeah,
think?
just one last thing is you'll also start to appreciate the purity and the technical obedience in the efficiencies of the forex market. That's one
Yes.
thing that has helped me over the years. Like right now, it's like if I'm looking at the irrationality of the Japanese yen and what it's done over the last 3, 4, 5 months post Fed in March,
Yeah.
it's not a fun trade to look at like technicals breaking down. But
Yeah.
over my career, when I've had these lapses of like, I can't believe that just happened. I can't believe the market would go that far or do that much.
Yeah.
It still rebalances. Like, I mean, if
Exactly.
you don't believe me, look at Tesla in 2020 to 2021. Look at
Yeah.
Microsoft. Look at
Yeah.
Apple. Look at all these other stocks that were endless trends for years and years and years. And what do? They rebalance. And
Right.
Forex is like the most purely technical market that we can
Yes.
trade. It's the most liquid
Absolutely.
market we can trade. So in that sense, you want to learn how to trade. And this is one thing that helped me be a better trader. If you want to be a better technical trader, Forex is the best market to learn. And so if you're learning on a demo, experimenting with different strategies, and here's what's going to happen for everyone that's out there and you're trying to get involved in trading, if you give Forex a try, you'll be a better trader. You'll be a
Yeah.
better stocks trader. You'll be a better stocks and options trader. You'll be a better crypto trader if you're interested. You'll be a better technician in the markets.
For
And what's
sure.
amazing is the narratives and the news and the catalysts that fuel the market movements, they somehow are given to us in tips and tricks and breadcrumbs that the market leaves in the charts. You'll
Yes.
see stuff in the charts where it's like, look, I think right now, Nick, that we're due for a correction in the dollar. Now, to what extent is it going to be that the Fed has to, all of a sudden backpedal and say, we want to raise rates, but we're not going to? It's like, I don't
Right.
know what the market needs to hear,
Yeah.
but I know that the euro
Something.
dollar is at 20-year lows with a crazy high bar count and oversold conditions. I know that the dollar Swiss is hitting parity like crazy and it's hesitating. The dollar yen is one of the biggest extremes I've ever seen on a daily time frame. It's daily, weekly, monthly overbought. And we've
Yep.
had one of the largest trends I've seen in over 20 years
Yes.
straight up. So like we've got to have something. And if we
Yep.
don't, then screw me. I'm irrational. But I'm also not going to lose my positions because I'm willing to take losses. If I'm
Yeah.
wrong on dollar yen, guess what I'll do? I'll scale out, I'll scale out, I'll scale
Yeah.
out, and I'll scale
Yeah.
back in and I'll rebuild and I'll be fine. Right?
Yeah.
I know how to do it, but I'm saying for anyone else, it's like you just have to be flexible. That's the best thing is risk management is the only thing you control. Be flexible on your trade size and just stay open minded. Nick, spending some time with you, spending time with any trader out there that does this for real, you want to learn from people that are doing this all the time. You want to
Yeah.
learn from people that are passionate about this market because there's ways to do it. It's not some secret code. It's persistence and it's discipline, it's being competitive, and it's really never settling on I
Yeah.
think I've got it figured out, right? I mean, my best strategies, my best years don't matter anymore.
Yep.
right? It's like I've learned from them, I'm taking them with me, but I'm constantly modifying and refining to make sure that what I do still applies to the current environment because
Yep.
I'm only as good as how I'm trading right now. I
That's
can't
exactly
rest.
right.
I can't rest in all my accolades of years of success and consistency if I can't do it now.
Yep.
So
Well, and
you
that's
have
the
to stay
thing.
open minded.
That's the thing, Chris, too, is if you, and this is something I talk about all the time, and you could say this until you're blue in the face. Unfortunately, a lot of the hype and stuff sells better in the world, and we've talked about that a million times. What we're talking about here, though, is the real, like real stuff. This is what traders need to hear more often. It's the heavy stuff. And if you're going to learn from somebody, if you're going to watch somebody on YouTube, especially someone for free, you should be watching people like Chris, and hopefully if you like my channel too. But the idea is people who are super passionate about this stuff. The markets are hard enough. There's a lot of people who are not actually, they're like faking all of their interest in it, or they know the
Right.
bare minimum just to sell stuff. That is going to take you down the wrong path. It's hard enough for people who are super into this stuff and super experienced. Those are people, though, that you at least want to pick up some pieces, pick up some nuggets from. And speaking of that, Chris, we're probably wrapping up here, but I would love to just give other people a chance to come find you and hear more from you. I know I've enjoyed some of your content. Where can people find you? What's the best place to connect with you, or
Yeah.
get in contact with you?
Yeah, best place to find me is I'm live on YouTube Mondays and Fridays for an outlook and a recap. It's youtube.com/Chris Pulver. All my handles are real Chris Pulver. I will never message, you know this, Nick, you deal with scammers and stuff. I will never direct message anybody soliciting. If you want to find me, Instagram, real Chris Pulver, youtube.com Mondays and Fridays at 9 a.m. It's youtube.com/Chris Pulver. It's for free. I'm not asking anything. I'm talking because really it's just a place for all my traders in my trading rooms that pay for my, time every single week. They trade with me every single day. This is
Yep.
a way for us to all get together, open it up for some new people, get some prospects out there that are interested in seeing what real trading is like and trade stocks, options, Forex, cryptos, and review everything and just provide some education. I've got timeless lessons of 20 plus years of trading and I'm like, I'll give it away. I don't care. You know why? Because I was like that too,
Yep.
right? I don't need to spend $20,000 on education to figure out how to trade.
That's
What
right.
pains me is, look, fund that trading account and learn how to trade by the markets. And if I can help provide some direction, if Nick can help provide some direction and some education that way, education should be the low cost, right? You take every nugget you can, you apply it, but the real capital is in your trading accounts and funding your trading accounts and keep investing in yourself and make sure you figure out that it's about risk management, it's about surviving, giving yourself time in the markets, and you'll see that you take care of the risk side, the profits end up coming in pretty nicely.
That's right. Well, guys, again, make sure to check out Chris. His contact information, we should have it all linked and shown up on the screen. So check him out, find him. Again, you won't regret it. It's one of the. He's not as big as some of the big names. I guess neither am I. But it's the valuable stuff is sometimes in finding people like Chris who are genuinely passionate about this stuff. Myself, and I hope that you make sure to go give him a follow and subscribe and wherever all the places. But Chris, thank you very much for coming on. It's been an absolute pleasure, and love chatting with you today.
Absolutely. Thanks, Nick. Take care,
All right,
everybody.
see ya.